Welcome back to Investing with Confidence. I am your host, Joshua David, having a good time in the studio talking about diversification, non-correlated assets, stock market, options market, futures market, and the Forex market with my good friend and my great pal, Mr. Al Connickson. Also, don't forget to subscribe to the podcast wherever you listen to podcasts and check out the YouTube. So, Al, as we get into this next topic, it's retirement, and more people are, there's a lot of people retiring right now. By choice, also not by choice.
Right, we don't always have that choice.
And we're seeing some of those ones that are doing it not by choice. They're not going into retirement with confidence. They're not comfortable knowing that they're going to be comfortable during that time, right? So there's techniques that we're seeing more and more people come to these investing classes that they want to understand and learn more about for their retirement accounts. And when we talk about retirement accounts, we're talking about 401ks, IRAs, 403bs, TSPs, whatever that sponsored or self-directed account that may be. Now, when you're helping people, I guess, gain the confidence going into retirement, what are some of the things that you're focusing on to help them make better decisions in those accounts?
Well, number one, understanding what you have. Do you have a 401k or 403b or employer-sponsored retirement plan? And if you do, what's in it? What is in it? Why is what you have chosen what you have chosen? Do you understand what you have? And do you understand that you can trade within those accounts? One of the things that we do is what we call dynamic 401k management. It's helping people that might only have an employer-sponsored retirement plan. That may be the only retirement vehicle they have other than relying on Social Security. Well, you want to make sure that you get the maximum value out of that. And, maybe there are lower fee assets that you have access to. Maybe once you learn our core strategy and you identify where price is going to be turning with different assets, you can still, and by the way, we teach you how to identify that on a price chart. That's the key. And we spend a lot of time showing you how to be very precise in that, very much like reading a price chart like a radiologist would read an X-ray or an MRI. And then once you do that, you can use that same price chart knowledge to look at the mutual funds that you have or the ETFs that you might have in your retirement accounts and understand which ones might be getting ready to perform better than others and which ones might be getting ready to underperform. Then maybe make some changes. So that's a part of it, but it's having an understanding of what you have. And unfortunately, most people know very little about their retirement plans because they've just been told, well, here's a group of things that you can choose from, put that together and just sit on this and don't worry about it. And people have just come to rely on what's in those accounts for their future. Oftentimes, and we see this all the time, Josh, where people come in and say, I thought that I was going to have enough, but I don't. What's the problem? And by the way, we started this last section talking about futures, Forex, and options. It doesn't mean you have to use those. You may be somebody who just wants to trade stock. The great thing about the Online Trading Academy is that we have education. We have classes that are structured to for each one of those assets. So you don't have to trade something you might not want to trade, but we want to make sure you have every opportunity to be successful in whatever you're doing. That requires the right education, the right skill building for that particular asset.
You kind of hit the nail on the head there. It's the right skill building. A lot of people think trading and investing is just knowledge. You need the knowledge and apply that with some skill. And if you have a 401k or an IRA with a company sponsor or whatever that may be, you got to ask yourself, what is in it? Is it in for me? Are there ways I can lower fees? Or maybe you can just make better decisions within those accounts. Al, you were talking about, say somebody has a 401k and they have maybe some access to do certain things with it, but they have mutual funds. You brought that up. Mm-hmm. Now, if anybody that's listened to Investing with Confidence here, they know that mutual funds can be devastating for retirement accounts. And a lot of it is because of those fees.
Right.
Now, is there any alternative to mutual funds to potentially lower fees?
Well, absolutely. You're going to pay a fee in a mutual fund, whether you have it in your retirement account or in just a regular investment account. there are a number of different fees within that mutual fund. There's the management fees, transaction fees, legal fees, a number of different things that basically are just siphoning money away from what you could have. And I've used this example before. If you have $100,000 that you put in the market for 30 years at 7%, you should have about $700,000, a little over $700,000, with a fee of 2%, only 2%, which is really, that is on the low side. That's going to take about 43% away from what you could have. That's over almost $330,000 siphoned away that could be working for you, that you could rely on when you go into retirement.
People think that 2% is low. That actually compounds negatively for you as an investor. What is the alternative then?
Right. The alternative is to get rid of fees. How do you get rid of fees? Well, you're in your 401k or your employer-sponsored plan, the fees are going to be there. But anytime you leave a job, whether you are fired, you retire, you're laid off, that 401k money is yours to transfer. Or if you don't have a retirement account, an employer-sponsored retirement account, you can set up a self-directed IRA. Your employer-sponsored money can be rolled into that IRA. If it's self-directed, you have no fees. And really, the cost of participating in the markets now is almost non-existent. Most of the brokerage firms have zero commissions for stock right now. The cost of trading the other assets we mentioned, options, futures, Forex, really small, almost so small that it's hardly even worth talking about. So it's not like it was years ago where it would cost you $200 or $300 to make a trade. So you eliminate the fees. The cost of trading is almost non-existent, but you have access in those self-directed accounts to other than mutual funds and other than stock. You can, in those retirement IRAs, Roth IRAs, self-directed, you can invest in the futures market, the foreign exchange market, the options market. And the reason that the institutions are doing that is that they realize, they understand that the potential for larger profits are there. And I was just looking at a Forbes article the other day, and this actually was a little bit surprising to me, but over a 30-year period, they found the average investor's average annual return was around 1.9%.
Wow.
It takes 38 years for you to double your money one time. That's why the institutions are not using the same things that these retail traders are using, which primarily are mutual funds. Well, how can things be so low? How can the average annual returns be so low when we've had these big movements up here over the last few years? Well, it's because we've also had some big movements down. And every time that your portfolio goes down in value, there's a recovery period there before you can get back to the point where you can make a profit. So that's one of the reasons the institutions are using these other assets, and that's one of the reasons our students choose to use them also.
Yeah, and just to elaborate a little bit on, Al was talking about the cost of trading it's pretty much non-existent. There's a lot of competition between brokers right now. Now think about this. If there's so much competition, the cost of trading is non-existent. What is their job? And then what is an advisor's job? What is a broker's job? It's not for sometimes your benefit. It's assets under management. Right. That's how they make money, is they have as much capital. And what are they getting paid on? Fees. And if you're able to lower the fees, what could that do for you? What would that look like if you eliminated a 2% fee? That adds up over a period of many years. That adds up to be a lot of capital. And here's the question I got to ask everybody: what are you going to do about it? And it's learning different techniques and different strategies, or maybe just making better decisions in your 401k. Now, we have another segment coming up. It's the last one of the show. And I want to get into how to get people started. Most people are brand new that are listening to the show. Some people are investing in their 401ks, but just don't know what to do. I want to help people get started in the financial markets. We will be right back.